We create tools that let blockchain builders stay true to their mission while at the same time meeting their compliance requirements. It's great to be back at BTC Miami for another year. 2020 saw a huge push for compliance in crypto globally, and 2021 promises more of the same. The issues at play are, which regulations apply to me and my company, and how do we maintain networks that are open and permissionless to use, and open and permissionless to innovate on top of, while at the same time meeting compliance requirements. If we start out at the base layer, innovation always attracts pioneers, and then the fringe element, because mainstream systems just don't serve them well. Regulation always comes in right after that, which is where we are now. It's imperative that we ensure that regulation doesn't kill innovation or cripple the core ethos and features which make blockchain technology special. Innovation can thrive under reasoned legislation as it creates a sense of safety for the masses. This safety then attracts more mainstream users, wherein the industry can experience significant growth. What is the travel rule? What is the travel rule? It is a global regulation around the transfer of money with two important factors. First, the parties in the transaction must be identified, and second, anti-money laundering checks must be run on your customer's counterparty. There's typically a set dollar threshold where this rule will kick in. Recently, the Financial Action Task Force, which is the global regulatory body for financial services, stated that the travel rule applies to cryptocurrency. So does this apply to your business specifically? Well, it depends on where your customers are, where you are, etc. These are some of the countries that have moved first regarding the parameters for digital currency. As you can see, the amount where this threshold triggers varies per country. Some of the early jurisdictions you can see are already regulating counterparty identity for transactions with unhosted wallets. Even if your customers are only US citizens, you will be required to meet the compliance requirements of where your user's counterparty is from in order for the transaction to be compliant and thereby completed. So we cover a few of the major ones here. Switzerland was one of the first to regulate crypto and was the first to say that unhosted wallets had to provide identity documentation for transactions. They also said that identity needed to be exchanged regardless of the transaction size by lowering the threshold to anything over 0, meaning all transactions that involve a custodial service. The US government has come hard for crypto over the past 2 years, with it really heating up in the closing months of the Trump administration. They released multiple iterations of new rules and gave much less time to respond than is customary. The new proposed rule states that travel rule would most assuredly apply to digital currency, and that travel rule would apply on any transaction over $250, not just transactions over $3,000. That second part also applies to the banking industry. On a good note, the community came together very quickly and met the deadline with thoughtful responses, and we're still awaiting the final rule out of FINCEN. Right after issuing the previous proposed rule, FINCEN came out with another one. This time, like Switzerland, saying that unhosted transactions fall under regulation. The response time for this one was even shorter, 15 days. The industry pushed back swiftly on both the timing as well as the substance of the rule, and was able to procure an extension of 15 days for one portion of the rule and 45 days for another. I'll tell you how you can help shape that final ruling later in this presentation. This inclusion of unhosted wallets is important because our exchange clients have shared with us that 40 to 60% of their on-chain transactions are with unhosted wallets, and their customers insist on being able to continue those transactions. If your platform transacts with unhosted wallets, you should track this regulation closely to see how it may impact your business. The other portion of this rule is increased reporting requirements to FinCEN. That includes both identity as well as on-chain wallet addresses. Due to the transparency of on-chain transactions, this gives the Treasury Department a much broader map into who is doing what transactions than is available in the traditional banking and cash system. This is definitely an area of regulation that requires broad pushback and is the focus of the shorter 14-day response period. I'd urge everyone, whether you're a user of cryptocurrency or an operator of crypto services, to raise concerns they have about these extended reporting requirements and what they mean for the privacy of all on-chain transactions. A couple of good things coming out of the Office of the Comptroller of the Currency, each with their own caveats. First, a fintech charter that allows digital asset companies, like Anchorage, who has already applied, to get national bank charters, freeing them from the state-by-state licensing regimes. The downside is that this is likely to only apply to the largest players in the ecosystem. The second is a rule allowing banks to utilize stablecoins, allowing crypto-based systems to move into the core of finance. This does require all wallets, hosted and unhosted, in those stablecoin ecosystems to be tied to a real-world identity. Singapore was another regulator to quickly jump in on digital currency. They are very welcoming as a whole as a government, going so far as to create regulatory sandboxes for crypto startups, as well as directly funding blockchain initiatives themselves. Their regulator is perhaps the most advanced in the world in terms of grasp of cryptocurrency, and they are frequently the first to regulate a new area of crypto, as well as the first to have quite nuanced regulations. They currently also have a $0 transaction value threshold for travel rule to apply, and also have the rule applied to transactions between service providers and unhosted wallets. January 4th, a new law was passed in Singapore, granting authority to the regulator to regulate any service facilitating a digital asset transaction, regardless of whether they're custodial of that asset. This is another dramatic scope expansion, and one that will need to be watched closely to see how it is adopted globally, as they could be looking to regulate DeFi platforms, unhosted wallets, and other actors previously considered outside the scope of direct regulation. It's important to note here that US regulators do frequently follow what Singapore is doing. So even if you do not do business there, you should track what they're doing from a regulatory perspective. Do you want to keep the business you have now and grow your revenue amidst this increasing regulation? There will be work for you to do, but if you follow this plan, you will be well prepared to meet the challenge. So what are the next steps to move forward? We need to respond to the regulators, we need to create a plan of action internally, and we need to execute against that plan. If you haven't already done so, I urge you to write a letter to FINCEN. All three organizations listed here, the Digital Chamber, Coin Center, and the Blockchain Association, have all made their responses public, so you can read them to learn the points that impact your business or you personally, and create your own response. The more voices FinCEN hears from all manner of crypto businesses, the stronger the message. Please keep it respectful and informative. FinCEN is eager to understand our perspective, so let's all avail ourselves of the opportunity to do so. The first step in the planning process is to take a look at what transactions you and your customers are involved in and to look at how these regulations will impact your business directly and indirectly. Ask yourself the following questions about your business and then about any service providers that you are assessing to assist you. First, what tokens and currencies do I support? And therefore, does my travel rule solution need to support as well? Does it work with unhosted wallets that my customers are going to transact with? Do I want to work with layer 2 networks such as Lightning, either now or going forward in 2021? And can my solution support that? And do you or would you like to support privacy coins? We can it with Transact ID. And then lastly, what other platforms do my customers transact with, and can I reach those services either directly or indirectly via interoperability? From there, it's going to take time and effort to plan for, respond to, and implement the tools required to meet these regulations. There will be changes to your process, operations, transaction flows, customer communications, support processes, and other pieces of your business. As a result, it will require planning, development, and extensive testing and communication throughout your organization. Your choice around how you respond to these regulations, as well as the tools that you use to support those decisions, will have a long-term strategic impact on both your own company, but also the evolution of the industry as a whole. Have your compliance and/or legal team review the regulations and come up with what the requirements are for your business and the jurisdictions you operate in. Then the tech team needs to decide the best path. Is it a protocol or a platform approach? Transact ID, built by Netkey, was the first to develop, first to market, and first fully functional protocol. There are others designing and building protocol solutions today, such as Shift, OpenVasp, Trissa, SignaBridge, and TRP. These protocols can be integrated deeply into your platform with tools to drive automated decision-making and transaction processing for high speed, high scale, seamless transaction flows. If you have a lower volume, more manual transaction and transaction approval flow, you can go with a platform solution by choosing one of our partners like Blockchain Intelligence out of Canada, Merkle Science or Osprey out of Singapore, or companies like Nota Bene. In these cases, your transactions are managed manually from a dashboard, but do not require deep integration into your own platform. While this will be real work, it will also bring real gains. Confidence brings users beyond the early adopters, and we've already seen companies like Fidelity dip their toes into crypto, but they won't put their licenses at risk to go further. Once risk and compliance can sign off that they are secure, institutional money will literally fly into our space. So thanks for making the time today. Let's make this a banner year for crypto. If you have any questions about Travel Rule and the safety of your business, reach out and we'd be happy to talk.